Then finally, this really interesting case study I was talking about. I think one of the things that I probably enjoy the most about my job is we get to invest in a wide variety of very unique kind of asset classes at the Global Value Fund. And as the portfolio manager, I'm constantly looking for places we can generate a good rate of return, but where we're not tied too heavily to whatever direction the market wind is going to be blowing. And one really interesting asset class we've done a lot of work on in the last year or so, and which is becoming a meaningful part of the GVF portfolio, you're all exposed to this today, is music royalties. It's quite of a strange asset class. So just to run through what it is, when you buy the music royalty, and I'm talking about pop songs that you hear on the radio all the time, you're buying from the artist the right to receive revenues whenever their pop songs are played or performed. And as well as receiving those royalties, there's the ability for the value of the catalogues you've bought to increase in value through time as the market gets bigger and bigger for songs. And that's one of the really important dynamics of the music world at the moment. Emma might be able to help run me through this chart at the bottom left. But sure. This shows US dollar millions of revenues generated in the music industry, so all the kind of the top hits you see. You can see the first wave there was vinyl. The second wave there was tapes, if you all remember recording things on tape.
Yes, recording the radio.
Recording the radio.
Remember trying to cut out the radio and trying to get the song.
Then in the 90s, you had this big boom of revenue from CDs, and then you had the counter fall as piracy came along and kind of decimated the music industry. And then more recently, the industry's really turned around, and the big driver of growth these days, and the market is growing enormously quickly, is from online streaming. So all the kids on their mobile phones, on apps like Spotify, Apple Play, Instagram, YouTube, there's been massive growth in demand for music. So the catalog, the value of these catalogs is going up as you can sell your catalog, your songs into a wider audience. For the artists that sell, people like Beyonce and Justin Bieber, it gives them the opportunity to monetize a lifetime's worth of earnings today. So you can sort of cash out, sell your portfolio for $200 million and sail off into the sunset and not have to worry about it. So on both sides of the equation are seeing a lot of value in this industry. And just to sort of run through what you're buying, so there's generally two things we can buy. The first is the master recording of a pop song. So whenever you play the radio, that's normally what you hear, a heavily produced, digital kind of pop song. And then the other thing you can own is the song itself, which is rarer. You think of the Beatles writing their own music, but is much more valuable. Whenever your song is covered or it's played in a commercial, you pick up revenues from that as well. As an investment proposition, music royalties has been around for a very long time, but it was a very niche asset class for most of the last 50 years. But in the last 5 to 10, a lot of new money's come into the space. The market's grown enormously. You've got a lot of big sort of private equity players in the space now, and a lot of artists are seeing the value of selling their portfolio. Like the big headline news at the moment is Queen. The big rock band Queen is reportedly trying to sell their portfolio of songs for $1 billion. So these are huge amounts of money, huge deals. As with anything kind of new and shiny in finance, people got overexcited to begin with. And the valuation of these assets got very stretched, and people were probably, in my view, overpaying for them. And during that time, two pure play music royalties businesses launched in London, and those were Hypnosis Song and Roundhill. Now, as interest rates, sort of to fast forward through today, these names listed several years ago, to fast forward through to now, as interest rates started to go up last year, all that excitement turned into fear about what these assets are worth in a much higher interest rate environment. And those are legitimate fears. If you remember what I was saying before, as interest rates goes up, the value of anything that pays a fixed kind of coupon should fall down again. However, as often is the case with these things, at least in our view, you sort of went from overexcitement to excessive despair. And about 4 or 5 months ago, we were looking at these names and we could see that we thought these had been heavily oversold. Even under the most sort of distressed scenarios we were modelling, we could see a lot of value in both of them. So we bought a position in both the funds, and I wish I could say all of our investments work this well. Within a few weeks of finishing buying our Roundhill investment, an industry player came in and offered a takeout price 60% above our share price. So tremendous win for us and a very easy exit for our investment in Roundhill. But I think the key thing for me and the team was that it demonstrated to us that all this work we've done, a huge amount of valuation work, had just been validated. If you have an industry player that's come in and is willing to buy the assets at a huge premium to the share price, that gives us a lot more confidence in our remaining investment in Hypnosis Song. Of the two names, Hypnosis is actually a much bigger company, so it's allowed us to get a much more meaningful position in GVF. And it also has this horrendously complicated, ugly corporate story going around it at the moment, which is perfect for us. We love deep value, messy situations where we can roll our sleeves up and start poking people and unlocking value. I won't go through the whole saga, but with shareholder consultation and with ourselves and others, two of the directors have just resigned from the board, the CFO's resigned from the board, the company's brought forward a whole new strategy to release value. So I'm hopeful that in the years ahead I can stand up here and tell you about how we've worked or we've seen value come out of our remaining music royalty business. But the thing that I love about it as an investment is as we sit there and work to get the value out that we see, we still think these assets are trading at nearly 50 cents on the dollar. We're earning a big coupon. We're getting a 6-7% yield while we're invested in these music businesses, and we think there's a lot of upside from there. And just to give you some final insights into what these businesses are, and to, pardon the pun, to show you some of the rock and roll. In terms of Hypnosis Song, it really is. So this is the remaining investment we have in GVF. It's a big liquid company we've got a big position in. It really is quite a special portfolio. They've put together a very large, very diversified portfolio of music catalogues that cover some of the most famous, iconic songs and artists all around the world. GVF owns, or if you're a GVF shareholder, you own the rights to songs from bands like Nirvana, Red Hot Chili Peppers, John Bon Jovi, famous singer-songwriters, Ed Sheeran, Justin Bieber. The list kind of goes on. So these are not kind of one-hit wonders you never heard about. This is real sort of culturally significant music. GVF owns 13 of the 30 most played music film clips on YouTube of all time. So essentially, whenever you turn on the radio today, you're going to find yourself listening to a GVF song that you own pretty quickly. And when you do, you can perhaps have a chuckle knowing that in hearing that song, you're helping to pay for your own dividend check. And that was my little case study, and that was all I had prepared. So
I really like that example because I like the idea, so often when these companies come to market and they get IPO'd, they often will come to the guys, they meet with the team, our four guys, and they'll get the whole IPO pitch, and the guys they never invest in IPOs, but we get a good sense of what the company is like, what they're doing, we get the initial pitch, we start writing up our notes, we start tracking the company. And what I love about this particular example is that we talk about that diversified underlying asset basket, and I mean, you can't really get any more diversified or uncorrelated than music royalties as something that we've purchased as an asset around the world and then added on top the discount capture part. So yeah, I think it's a good example.
Plus it's a bit different. It's been a very fun investment, watching music videos and trying to value them.